I'm Grant Mercer, this is Storm Stock Solutions, and we're getting you set up before the opening bell by bringing a little clarity to the chaos in today's markets. Let's start with the big picture that could frame sentiment at the open. According to reporting from MarketWatch, the conversation around Americans' affordability crisis is back in focus. The piece points out that the real pressure on households isn't just about tariffs or the latest trade spat, but the long-running surge in what it calls the unaffordability 5: housing, food, healthcare, childcare, and energy. Why does that matter for today's trade? When those core costs stay elevated, it shapes how investors think about consumer spending, wage demands, and ultimately the path of inflation and interest rates. If markets start to believe that affordability pressures are structural, not temporary, it keeps the spotlight on consumer-sensitive names in retail, staples, and housing, and can add a layer of caution to the broader equity story even when the headline indices look calm. On the geopolitical front, MarketWatch is also highlighting renewed tension around Venezuela, with the U.S. reportedly pressuring for regime change and oil traders watching closely. This is just a foreign policy headline. Venezuela sits on vast crude reserves. Traders will be focused on whether any escalation meaningfully disrupts supply or simply shifts barrels around on the global chessboard. If markets sense real disruption, that can put a bid under crude prices, impact energy stocks, and ripple into transportation and consumer sectors via fuel costs. Now, in terms of strength, one name sitting near the top of traders' screens is Tesla. MarketWatch notes that Tesla is the lone big tech-adjacent heavyweight that hasn't printed a new all-time high this year. Yet, it's now within roughly 6% of that record set last December. That tells you that there's been a powerful rebound off the lows, even if it's been more volatile than some of its mega-cap peers. For the tape today, professionals will be watching whether Tesla can keep that momentum going. A push closer to that prior high reinforces the narrative that growth and AI-adjacent names still have a strong bid underneath them. On the flip side, if it stumbles just shy of that level, it can be a reminder that expectations are already rich, and the margin for disappointment is thin. Let's talk about some areas that traders are watching as potential opportunity zones, not recommendations, but themes that could matter if conditions line up. First, payments. As Emily Berry at MarketWatch reports, payment stocks have essentially endured their worst run in about 15 years. JP Morgan is highlighting names like Visa and Toast as quality businesses that have nevertheless struggled for momentum in 2025. That kind of backdrop, strong franchises, weak stocks, often becomes a battleground for investors debating whether a longer-term shift in competition and pricing is underway, or whether this is just a deep cyclical lull. Into today's session, watch how the payment processors trade versus the broader financials. Do they finally catch a bid? Or do they keep lagging despite the downbeat sentiment already priced in? Second, chips, specifically the less flashy side of the semiconductor world. MarketWatch's Brittany Nguyen highlights Applied Materials as a top pick from TD Cowen, arguing it could benefit from unprecedented momentum in both DRAM and leading-edge foundry upcycles. That's important because equipment makers like Amit sit upstream from all of the AI excitement. When you see positive commentary around wafer fab tools and memory cycles, it suggests the CapEx engine behind AI and high-performance computing is still revving. Traders will be watching whether equipment names outperform the headline chip darlings, a sign that this cycle might have more durable legs. There are also a couple of under-the-radar macro and positioning stories on the radar. One piece from MarketWatch flags that some crazy investors, those are their words, may be betting too heavily on U.S. equities, potentially breaking a basic rule of diversification. For the opening tone, that kind of narrative can feed into a debate about crowding. If everyone's on the same side of the boat, any negative surprise, whether it's an economic data miss, a geopolitical flare-up, or a disappointing earnings guide, can trigger faster, sharper swings as investors rush to rebalance. And tucked into the broader consumer and retirement story, there are angles around Social Security benefits and tax-efficient giving strategies for older Americans. While those aren't intraday trading catalysts, they do frame the longer-term backdrop. Households trying to stretch every dollar in an environment of higher structural costs. Over time, that influences flows into financials, retirement products, and even how steadily consumers support discretionary sectors. On the consumer side of the equity market, one name to keep an eye on is Costco. MarketWatch notes its stock has turned negative for the year as U.S. sales trends decelerate. Comps are still rising, but at a slower pace than the month prior. For a company often treated as a bellwether for value-focused consumers, that deceleration raises questions about how far the trade-down story can carry earnings. Heading into the open, watch whether investors punish that slowdown further or treat it as a blip in an otherwise resilient model. So to recap the playbook for the open, macro sentiment is being shaped by concern over deep affordability issues and the real-world cost of living. Geopolitically, oil markets are on alert around Venezuela. On the strength side, Tesla is closing in a run on its all-time high, and semicap and payments stand out as battleground areas that could see renewed focus. Meanwhile, stories about crowded positioning in U.S. equities and decelerating sales at consumer staples, names like Costco, add a note of caution. I'll be back with intraday updates once the market is underway, helping you separate signal from noise as new data hits the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.